Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin continues under pressure this week, dropping to around $76,987 after briefly touching $82,000 earlier this month. Ethereum is trading at approximately $2,116, while Solana sits at $84.66. Investors rotated nearly $1 billion out of Bitcoin ETFs last week, ending a 6-week inflow streak as geopolitical tensions and rising treasury yields triggered risk-off sentiment. Despite brutal market conditions, Kraken's parent company Payward posted $507 million in adjusted revenue, up 3% year-over-year, while Bitcoin fell 22% and industry-wide spot trading volume collapsed 38%. Kraken's diversification strategy showed results, with futures trading up 51% and recent acquisitions including tokenization platform, backed and derivatives exchange Bitnomial positioning the company ahead of its planned IPO. The Clarity Act cleared the Senate Banking Committee with bipartisan support on May 14th, marking crypto's clearest path to comprehensive regulation. However, the bill needs 60 Senate votes, requiring at least 7 Democratic crossovers, and faces debates over ethics provisions targeting presidential crypto holdings. Senate leaders set a July 4th deadline, with missed timelines potentially delaying legislation for years. Troubling patterns emerged on prediction markets. 9 interlinked Polymarket accounts accumulated $2.4 million in profits betting on US military actions against Iran, with a 98% win rate. The accounts were created days before America's late February bombardment of Iran, raising insider trading suspicions. This follows the arrest of Army Master Sergeant Gannon Ken Van Dyke for allegedly using classified intelligence to win over $400,000 on Polymarket. The SEC is preparing an innovation exemption for tokenized securities that could arrive this week. The framework would allow digital versions of publicly traded stocks to trade on blockchain platforms under lighter regulation. DTCC plans limited tokenized asset trades in July with broader launch in October, while Nasdaq received approval in March for its tokenized securities framework. Ethereum founder Vitalik Buterin published analysis arguing that AI-assisted formal verification could revolutionize cryptocurrency security. Formal verification uses mathematical proofs to confirm software behaves as intended. Buterin acknowledged the approach isn't a cure-all, but framed the technology as essential for securing complex systems like zero-knowledge proofs and consensus mechanisms planned for future Ethereum upgrades. Citibank warned that Bitcoin faces greater quantum computing risk than Ethereum due to slower governance processes. Approximately 6.5 to 6.9 million Bitcoin, roughly one-third of circulating supply worth around $450 billion, remains vulnerable due to exposed public keys. Despite the risks, Citi remains constructive on crypto's long-term ability to adapt through post-quantum cryptography. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.